Welcome to Explain the Charts, where we dissect the markets and provide you with the tools to make confident trading decisions. Today, October 31st, 2024, we're analyzing the S&P 500 and SPY to understand the current trends, reversals, and key price levels. Let's first dive into the news to get a sense of the macroeconomic factors impacting the market. Recent headlines indicate a mixed sentiment in the market, with investors grappling with the latest earnings reports from major tech companies. Microsoft's revenue guidance fell short of expectations, dragging shares down, while other tech giants like Meta Platforms and Advanced Micro Devices also reported mixed results. Furthermore, the third-quarter U.S. gross domestic product reading came in below expectations, suggesting a deceleration in economic growth. This economic news, coupled with the volatile tech earnings, has created uncertainty in the market, potentially leading to a sell-off in the near term. However, it's important to remember that the stock market is a forward-looking indicator, and investors are already anticipating a potential rate cut from the Federal Reserve in the coming weeks. This prospect could provide support for the market, potentially leading to a rebound in the weeks following the Fed's decision. Now, let's shift our focus to the charts to see how the SPY is behaving and whether it aligns with the current news. Taking a look at the daily chart, we can see that the SPY has been on a relatively bullish run over the past few months, forming higher highs and higher lows. This upward trend is supported by strong economic data, such as the robust labor market and rising consumer spending. However, the recent sell-off following the disappointing GDP report suggests that the market may be experiencing a short-term correction. If we zoom in on the past month's candles, we can see that the SPY has been consolidating around the 5,800 level, suggesting that the market is seeking direction. This consolidation phase could be a sign of indecision among investors as they weigh the positive economic data against the recent news of weak earnings and economic slowdown. Zooming into the one-hour chart, we can see a more granular picture of the SPY's movement. In recent hours, the SPY has been trading in a tight range between 579 and 581, further demonstrating the market's indecision. This range could act as a support and resistance zone, and we can see that the SPY has repeatedly bounced off these levels in the past few hours. It's worth noting that the SPY's recent price action appears to be closely correlated with the release of economic data and earnings reports. For example, the SPY experienced a sharp drop following the release of the disappointing GDP report, but it quickly recovered after the Federal Reserve signaled a potential rate cut. This demonstrates the market's sensitivity to news and events, and it's crucial to stay updated on these developments to make informed trading decisions. Now, let's take a look at the 15-minute chart to get a closer view of the SPY's very short-term price action. This time frame can provide valuable insights into the immediate sentiment and potential momentum in the market. As we observe the 15-minute candles, we can see that the SPY has been exhibiting a choppy pattern, indicating a lack of clear directional bias. This volatility is likely a result of the conflicting news and data we discussed earlier, as investors struggle to determine the market's future direction. However, we can see some potential support levels around 579 and 581, where the SPY has bounced off in the past. The SPY's current price action suggests that it's likely to continue trading in a range in the coming hours, as investors await further news and data to provide a clearer picture of the market's direction. It's essential to remain vigilant and monitor the market closely for any signs of breakouts or breakdowns, which could indicate a shift in sentiment. It's also worth noting that the market is approaching the weekend, which could lead to reduced trading volume and potentially increased volatility. In conclusion, the SPY is currently caught in a tug-of-war between conflicting news and data. While the market has been on a bullish run in recent months, the recent sell-off following the disappointing GDP report suggests that a short-term correction is possible. However, the prospect of a rate cut from the Federal Reserve could provide support for the market in the coming weeks. Key price levels to watch include the 5,800 level, which has acted as a support and resistance zone in recent weeks. If the SPY breaks above this level, it could signal a continuation of the bullish trend. Conversely, a break below 5,800 could indicate a further decline in the market. It's important to stay updated on economic news and earnings reports, as these events can significantly impact the SPY's movement. Pay close attention to the Federal Reserve's decision on interest rates, as it could have a significant impact on the market's direction. Finally, remember that the stock market is a dynamic environment, and it's crucial to adapt your trading strategies based on the latest developments.